So let's go into our trade tab in the TOS platform. Go to May. Now I already have some, I have a current position on here that I'm doing for April, but we'll ignore those for now. There's only 4 days left on that. Let's see, we mentioned the 145 level on the upside. So let's take a look at these. We may even want to go to the 150s, which would be this upper trend line here if we can get a decent price for them. And the picture looks good. So let's take a look at this. We're going to buy. We're going to right click, go to buy calendar, and then we're going to go down to our lower strike, which was right around 132 or 130. If we can hit 130 at a decent price, let's do 130. Well, we might even be able to get the 125s, which would give us even more downward protection. So if we can hit 125, that might be okay too. But let's try the 130s and see what the graph looks like. We're going to go to right click, buy calendar. Oops, I gotta set the advanced order to blast all. Actually, we're not putting these on individually. We're going to do a calendar as a double calendar as one order. That's the best way to do this. If you're adjusting, you may want to do it differently, but we're going to do this in a we want to submit this as a single order, double calendar. So we're going to go to buy, double diagonal, and double calendar. So we're going to click on that, and this will bring up our strikes. Now we're going to have to change these. We want the 150 calls, which are fine, but we want the 130 puts. So we got to go down to the puts and put in the 130s. Okay, and now, so we double check this. We're buying one of the Junes. We're selling one of the Mays at 150. We're buying one of the June 130s, and we're selling one of the May 130s. Okay, and this is for a $4.68 debit. Let's go right click. Now you can right click on this little blue thing here, but I've found it's easier just to click anywhere in this green area. Just right click on that, and we're going to analyze this as a duplicate trade. Now I have to eliminate my current position, so we're going to hide positions down here, and we're going to take a look and see what this is going to look like as a double calendar. Okay, it looks like we're a little bit off center, and we've got a big sag in the center here. So it looks like we're going to have to tighten up our strikes a little bit. Let's go with a 145. The 145 calls, and we'll keep our 130 puts. That looks a little bit better, right in the center. You know, we've got a couple $100 of profit. We got to change that. Now we're going to be paying $5 a debit. Whenever you have, right down here, if you see this little red lock, that means you locked in. If you change any of the parameters, it's going to lock in the debit that you're paying. But if you change any of these parameters, if you change the strike prices of your calls and puts, then you need to unlock this to get the current price on this double diagonal. That looks a little better, doesn't it? Now let's see, let's set our slices so that we're break even. And we want them to break even on our Mays. And so we just all we had to do was set our slices to break even on the May 17th. We want to set our probability date out to May, the expiration date. And I think we're good to go. Okay, this looks pretty good. I mean, you know, we've got our tent set up here. We've got this is the graph that we want to see. This is exactly what we want to see. We want to have wide break evens. We want to have the green line again is our expiration, is the profit at expiration or loss. So our peaks are about 257 and 297, a little bit higher on the upside. Right now we're pretty close to the center of this little tent, and I mean the price is not too bad. I mean obviously if we can shave, see what I'm doing here now is I'm taking a look at this $5 debit, which is the midpoint. If we can shave this down a little bit, you can see that we get into profit pretty quickly. But you know what? Nobody gives you anything in the market. They just don't give it to you. I mean, if we can hit our mid price of $5, we'll be considered extremely lucky here. Where am I? Okay, analyze. Okay, what we want to do now is just kind of take a look at this. That looks pretty good. We've got 150 on the upside as our break even. We've got 125.26 on the downside. Let's take a look at the graph again. We got 150 on the upside, which is good. That's right where, if it does break through and follow this blue uptrend line, we'll probably hit the top of it right around 150. And that's what we want to do. If we hit the bottom, let's see, where's our break even on the bottom? Is about 126. So we're right down in here, which is a pretty good level. I mean, it could go down lower than that if we continue in this downtrend channel. But we've got a pretty wide range here. Now the EEM can move. I mean, it can go up pretty strong one way or another. But we've got a pretty wide profit range here, which gives us a little bit more confidence. So what we want to do is, now that we have these in position, and we can play with this a little bit more. Let's pull the puts up to the 135 level. What does that do to our break even? The break even now is just below 130. Well, if we think there's we got to get rid of this red lock here. We're going to pay a little bit more for the debit, and remember, your maximum loss on a double calendar is the debit that you paid. So $5.25 is our maximum loss on this. And if you look at the prices here, we can set our slices to a different parameter. You can see that the margin required for the calendar is $523, and that's also our maximum loss. So let's take a look at this. We're just to spread those out a little bit. Now, our break even to the downside, if you were slightly bullish, this would be a better play, because the break evens on the downside moved up to the 130 level, and the break evens on the upside now is up around 151 or a little bit higher. So if you were slightly bullish on this, you might want to just play with those numbers a little bit and bring those puts up to a closer to the strike price and move those calls out a little bit, which they are at 145. That gives us a higher break even on the upside. But since it may appear that we're still following that downtrend channel, we're going to keep our puts at the 130 level and our calls at the 145 level. And I think that'll work out very well for us here, and we're pretty much in the center. So we could go down, we could go up. It doesn't matter too much. We'll still be in a profitable position. Now, to order this, to put this position into the order queue, all you have to do is take a look at this, right-click, hit confirm and send. And it'll bring up the order confirmation dialog box. And what we're doing is we are putting in a double diagonal. This is a calendar spread. And we just want to make sure that everything is correct here. 145s, 130s, 145, 130. So we're doing the calendar. We're doing a double calendar. The cost of our trade is $4.98. $6 in commissions for a total cost of $504. And that is also, if we take a look at this, $498 is our margin requirement, and it's also our maximum loss on this trade.